Global markets ended the week mostly higher. Well, let's get more now on how regional markets have been performing. And we can speak to Jameel Ahmad, who is the chief analyst at GTC and a global markets commentator. Jameel, welcome back to the program. Thanks for joining us. We saw an initial bounce after the ceasefire was first announced, and the situation remains obviously quite fluid. But just talk us through the general trends that you've been seeing in the markets.
Yes, you're correct, Tom. The situation definitely remains fluid, and investors are continuing to watch all headlines because this is a sentiment-driven international financial market, whether you're looking at regional markets or whether you're looking at global markets, or whether Wall Street, Europe, and so forth. We're reacting to headlines rather than economic data and themes, and I still think that's going to be the case for some time. Of course, we're all hopeful worldwide, and fingers crossed that this diplomatic mission that's set to take place in Pakistan this weekend leads to all tensions and any geopolitical issues easing, but nonetheless, we are seeing some risk appetite come back into the markets. So financial markets are looking more positive as a result of some investor confidence heading into these weekend talks, and of course, the ceasefire that was announced this week. We're also seeing a little bit of more and increased volatility in oil prices, but we were going to expect that after the sudden fall after the ceasefire was agreed. But what I think is more promising for the international investor landscape is that some of the trends we saw during this geopolitical crisis, such as significant strength in the US dollar as a result of investors rushing to cash is king mentality, where they just want to hold cash and the US dollar is a safe haven in their portfolio. We did see the sharpest drop since January, just the previous traded session. So I think investors are optimistic that things will get back to normal. But of course, we have to watch the headlines, and any investor needs to be very much up to date on potential risks. Investor education is absolutely critical at this time. Nobody knows what's going to happen in the world, but we're trying to react and watch every headline as they come through.
Okay, and you know, as we've been saying, a volatile situation, volatile oil prices, that's despite a sharp fall in the context of the ceasefire deal that was signed. I just want to ask you where you see things heading to.
So we saw the sharpest fall in a good couple of years, not since the Russia-Ukraine crisis did we see a fall like we did on the previous training session. But nonetheless, there's still some concerns and a number of questions that will remain unanswered for a long time to come. And that's what's helping oil prices move back towards 100 US dollars. Of course, by the time these weekend talks conclude, and hopefully in a positive way, that oil price at 100 US dollars won't remain for that long because it's going to create quite an inflation outlook for the world economy. However, I do think the questions that remain unanswered is pretty much what's going to happen to supply and demand. How long is it going to take with that oil that is stuck in the Strait of Hormuz? How long is that going to take to be transported to where it's supposed to be? And also, unfortunately, the regional issues that have taken place, where there has been infrastructure damage and so forth, what impact that's going to have on the region being able to produce that commodity. And also, based on the global economic repercussions, how much demand there will be for the commodity in the future. And unfortunately, there's just a lot of questions that don't have answers. And we're not going to have answers for some time. And that's why investors are still looking for a higher oil price for longer. And let's see what happens next.
And when you look at the currencies, you look at commodities, particularly gold, a lot of talk about gold the last few months, really. I mean, have you detected any changes in investor behavior?
I think what surprised a lot of investors, but in fact, when you look at geopolitical crisis, it can happen a lot, is gold actually fell during the initial aftermath of what unfortunately took place in the region. And of course, you look at gold as a safe haven, you think that there's financial market uncertainty, economic uncertainty, and so forth, that gold will always benefit. And sometimes that's the case, but we never say never in international finance. And we did see gold prices actually fall significantly over the past month, all the way from above 5,000 to as low as 4,500 and below at some points. But we're starting to see a little bit of investor optimism come back into the gold market. I think that's a result of the weakening US dollar. So it's a clear portfolio restructure that we saw across institutions worldwide, where they were actually taking some profit off gold, moving holdings back into the US dollar as a cash is king mentality kind of trade. But now we're starting to see the US dollar weaken, and it will likely continue to be the case as long as these ceasefire talks do conclude optimistically this weekend. And that means that gold prices might actually benefit from this, although it will be seen as ironic because it will be seen as less uncertainty in the market. But the reason for this is that should we have a quick conclusion to what has been a very unfortunate crisis, it does mean that hopefully the world economy will start ticking again. And we're going to move back towards the themes that we've been speaking about for months, such as what's going to happen in the world economy 2026, what is going to happen with central bank interest rates worldwide, where we're expecting more interest rate cuts 2026. That's a benefit for gold. And in fact, because of this regional crisis that took place, we saw central banks indicating they will not be able to cut interest rates. And that also did lead to gold prices declining over the past month.
Jameel, the World Bank has issued a report about the region's economies, and it appears that Saudi Arabia is singled out for being the most resilient of all of the regional economies. I just wondered if you could just tell us a bit more about what that report says.
There's a couple of reasons for this. Overall, in terms of the headline economic figures, we're looking at GDP growth of Saudi Arabia now 3.1%, roughly 2026, somewhere down from the 4.2, 4.3% estimate that some institutions were suggesting just a couple of months ago. Of course, that is somewhat of a drop, but we have to compare that in a broader scope with what world economies and individual economies elsewhere worldwide will be looking at 2026. And all economies have been impacted by what has happened in the region. And that means that a lot of estimates are going to start being decreased in their initial estimates. But essentially what they've said is Saudi Arabia in the region will remain the top performing economy. It's seen as more resilient than its regional peers, and I would also say more resilient than some of its global peers as well. And one of the reasons why, if you look at the region, why the Saudi Arabian economy might not be as impacted as potentially where I'm situated now, is because if you look at what contributes to GDP, for example, Saudi Arabia is a growing tourism hub, but it's not known as a tourist hub. It's not known as an events hub. This is something that's tried to emerge over the past couple of years, but it's still on its way. Whereas if you're looking at the United Arab Emirates and so forth, so many events have been postponed. Obviously, tourism has been delayed based on what's happened. And that's why you're looking at some economies being a little bit more sensitive in terms of what's going to happen to economic projections than others. And that's also what's supporting the Saudi Arabian resilience message.
Okay, and just lastly, Jameel, I mean, despite everything, it does look, doesn't it, like business confidence in Saudi Arabia is still pretty strong.
We had PMI figures out this week, and we once again saw figures above 50, a number above 50, sorry. So basically, for those who are watching PMIs, any number above 50 signals growth in the sector, and a number below 50 signals contraction. So the business confidence reading that came out this week was above 52, so it's still quite above that parameter for growth. It was below, of course, the previous figure because of what's happened in the region, but it does show that private investment, private economy is still moving. You've still got the 2030 vision projects and so forth taking place. So not that much has been impacted longer term. It just happens to be a short term what's taking place, and hopefully remain short term. And as we sometimes see with issues in the world economy, no matter what jurisdiction or which location you're situated in, when you have a short-term impact in the market, it can be recoverable. And I do think that if we see this ceasefire hold, and hopefully all of these regional issues are put to bed at last, then the regional economies, the Saudi Arabian economy and the world economy as a whole can hopefully kick on towards what it was hoping to achieve in 2026.
Okay, thank you very much indeed for that. Jameel Ahmad, Chief Analyst at GTC and Global Markets Commentator. Thanks for your time. Well, as we've been saying, despite global and regional pressures, Saudi Arabia's economy remains resilient, with business confidence still in growth territory and with substantial foreign reserves, which far exceed the global average.